So you or someone you know have fallen on hard times and are facing foreclosure. I hope to be your helping hand through this tough situation. It happens to the best of us, due to situations that are out of our control. Divorce, illness, death, job loss, and transfers are some common reasons. It's important to know that your options depend on how much time you have, and where you are in the foreclosure process. You will have a lot more options if you just received your notice. So act fast, as the process and timelines vary from state to state. In some states it's like a foreclosure fast lane. In other states, the process moves slower. The first step of the foreclosure process is the actual first payment default. Every mortgage offers a 15-day grace period with a minimal late fee if it's paid by the end of the month. At 1 month, the bank will send a missed payment notice, and after the second month missed, the bank will send a demand letter. Depending on the bank and the time in default, it will send a notice of default at between 90 to 120 days of missed payments. At this time the borrower is in what we call pre-foreclosure. Again, all lenders are different, but typically a lender will give the borrower another 90 days to cure the loan. If the loan isn't reinstated, then the lender will move to record a notice of trustee with the county. This will schedule the actual date of the foreclosure for the property. If you've missed just 1 or 2 payments, then you may be able to be a little creative, as you have the luxury of all the options available. By creativity I mean, maybe it's a matter of renting out the property, or even renting out a room through Airbnb in order to get some additional income. If it's because of an injury and you are now back at full strength, then maybe you could ask friends or family for a loan to get current. This gets harder to accomplish the closer you get to auction date. The next option that most people try to do is a loan modification or forbearance. These two approaches are like reapplying for the loan. You have to provide pay stubs, taxes, budgets, pretty much everything but a firstborn. So, if you're unemployed, or got in the situation due to a continuing lack of income, this may not work for you. There are 2 ways a forbearance can work, and one way is better than the other. Let's say your mortgage payment is $2,000 and you are 3 payments behind. The best way a bank can help with a forbearance is by adding on the late payments to the end of the mortgage, thus allowing you to keep the original payment. The less attractive way is where they take the $6,000 and divide it by 12 to get $500, then add this to your mortgage payment for a monthly $2,500 for 12 months. A major negative of loan modification and forbearance options is that the foreclosure process keeps going while you're negotiating. Now for a more serious and tougher decision in regards to selling the property, like bankruptcy. This option is not to be taken lightly since your credit is affected worse, and for longer than a foreclosure. By doing a bankruptcy, you will also be paying higher interest rate premiums for a long time. Bankruptcy is on your credit report for 10 years, compared to a foreclosure, which is on your credit report for 7 years, and in most cases a bankruptcy actually doesn't save the house, it prolongs how long someone stays in the house. But in the end a judge can require the sale of the property. It will ruin your ability to get credit. I personally don't believe bankruptcy is the way to go. And no, foreclosure is not a good option either. A person is better off selling the property. The impact on your credit is short-term, and when your financial situation improves you could be buying a house within the next 2 years. Finally, if you have time, then a traditional sale could mean that you'd walk away with a check. But again, this is only if you have time. If a foreclosure date has been scheduled, then there are only 2 options left to you. The first is selling to a cash investor. These buyers only buy homes at a discounted price, but this will at least allow you the chance to walk away with some cash. And the second option is to sell a property subject to the existing mortgage. This essentially means an investor takes over your payments. I'd be happy to explain in detail what the pros and cons of this are. Looking forward to help you answer any questions. Best wishes.